Good evening everyone, and a very happy Diwali from Strategy One team. We're back with a very short video. This is our Diwali gift to you. We have a host of passive strategies that we are using for our clients, and we are basically trading with our clients on. We are gonna share one of those passive strategies with you guys as a Diwali gift from our end. This passive strategy is something that has been widely used by our clients, by us in the past, and it has given fantastic results with very less trades. So without further ado, I'm going to talk about the strategy in itself. We can take any index, but we are taking basically Nifty index here, Nifty 50 on a daily time frame. What we are trying to do is any indicator that we would use will give a buy or sell signal, but when we do investments into Nifty, which is via Niftybees, this buy or sell signal will basically mean that there is an entry and exit, but for considerable amount of time, when there is a sell signal that is there, we are not able to short it. So at that time we buy another asset which is much more stable, and that's how we play the swing. So without further ado, I'm going to talk about this strategy. We're going to use a very basic indicator in super trend and on a daily time frame. So this is what it will look like when we do super trend 10-3. So as you can see, it is giving some clear trends, uptrends and downtrends. For our practical purposes, we can, although 2023 is a decent amount of time to look into, but we can we'll start looking at it from 2022, right, 2022 onwards. So here this strategy basically will, let's say, from the start of 2022, which is quite good because we have a new signal from the 3rd of January. So at the close above the super trend, when the super trend becomes green, we would basically buy the next day. So we'll basically buy somewhere here, which is 17,667, and when the market goes down, we exit. So we basically would exit somewhere around here or the very next day. So there's about 100 point loss here. Yeah, about 100 point loss here in this strategy for this first week. Now when it is under the super trend negative, at this time we actually invest into Niftybees, liquid bees. So earlier the investment was into Niftybees, now we invest into liquid bees. When we invest into liquid bees, for this period we invest from the 24th of January to about 16th of March. Now while we do that, what it does is, for a period of about 2.5 months or 2 months to be precise, we get 3.5% interest rate that you get from Niftybees on your liquid bees on your capital, and then again we come into the swing mode. Then here again we enter at 17,199, and we will eventually end up exiting somewhere here, which is 17,246. I will not count that as any gain, but we are still down by 50 points here, but we have gained something on the interest. Then again from 19th of April onwards, we basically will buy liquid bees, and then again enter into Niftybees on the 8th of July. So another 3 months we are doing liquid bees, again getting 3.5% interest on this. You can choose any liquid fund here, or you can choose Bharat bond here. You can choose any of these instruments which are giving you a good coupon rate. Then you can we will end up buying at the 8th of July. So we basically end up buying at 16,271. Now here we will actually get our major gain for the first time around. Our exit here is going to be on this candle, which is 17,425, because super trend turned negative on this day and the next day we exit. So 17,425 is where we exited, and when we exit from here, so we basically got about 1200 points gain here. We had lost about 100 points earlier, then 50 points, and then we have gained 1200 points here. So there was about you can say about 1100 points is what we have gained in total, because this was actually a gain. We can consider that as a loss with slippage. This was a loss, and then this is a 1200 point gain. Then again we go into liquid bees. For the September, not much of a period. We again enter here now at the top. So here we enter, and then we would have lost about 700 points here is what we would have lost. So we had 1100 points gain. We have lost 700 points. We have basically, so we would have lost about 900 points. So we would have again gone back to 200 points gain. And then again for a period of 1 month or so, we are in liquid bees. Again, I think around 6 months we have already been in liquid bees. So we are at 1.5% gain from there, and about 200 points, 300 point gains from the Nifty bees. Then again here we get another entry in October, 24th of October. The entry here is around 17,800, and then the exit here is around 18,290. So 17,800 to 18,300 in a sense. Again we got about 500 points here. So we had 200 points earlier, and then now it is 700 points here. For the whole month, for the rest of the period, we were going to be in liquid bees. So again, as I said, 6 months of liquid bees would give us about 1.5%. 700 points on Nifty bees on that capital would probably give us on that capital would be around 5.5%. So we are talking about 6.5% passive income by about 7 to 8 trades in a year. Now let's look into it. What we would have done in January in 2023, we would have stayed in liquid bees since the beginning of the year until April. So 3 months again in liquid bees. Then in April we would have basically gone long. We would have got entry at 17,609, and then the exit would have been at 19,400. So about 1,800 points gain is what we would have got in 2023. So a total gain of about 2,500 points in the last 1.5 years, up to this point. And again, for a period of about a month, we would have been in liquid bees. So 4 months of liquid bees. Then again, we would have entered at this stage around 19,767, exited at 19,677. So about 100 points we lost here. So we were at 2,500, we had 2,400 points, and then we would have been in liquid bees again. So another 6 months of liquid bees, 1.5, 0.2% over here. Then the 2,500 points that we are talking about, that would yield about if not so I think for the quick calculations, better to do that on let's say futures value. So 2,500 points into 50, while the capital of futures or liquid bees would be around Nifty bees will be around 10 lakhs. So about 12% gain out of only Nifty bees, and then about 3% gain from liquidbees. So a 15% gain over last 2 years. Very passively, both of the instruments can be pledged. Both of the instruments can be used to trade further into options, and that's what we have been doing. So this is a passive income to generate with very few trades, participating in the upside of the indexes, and a brilliant way of actually multiplying your wealth. We have this strategy in form of an algo as well. We have coded it for you. The algo that is coded is like this. We can actually share with you what the code is. It's a very simple one, as we said. If Nifty is in uptrend, we would buy Niftybees. 1 lakh value is there, and as soon as it goes down on downtrend, we will exit it. We are exiting after the day is closed. Then after that exit has happened, then we will enter into liquidbees, and if the market again goes bullish, then we exit liquidbees. This is basic settings that is there for the algo. 1 lakh is the capital required, and you can start trading with this algo. It's called consistent compounder Nifty. We'll be sharing the link of the algo as well. It is a 500 rupees fee that we are putting in here. At this 500 rupees fee, you can actually copy the algo, and the algo becomes yours. If you want, you can actually see how the coding has been done, and you can code it yourself. I would rather suggest you to code it yourself, but if you want the ready-made code, you can actually pay us a nominal fee and get it. So just before we finish, just wanted to also look into what was the DD of this strategy while we did this, and what was the return if we would have done just a straight away Niftybees kind of an investment. And I think that will add a lot of impact in terms of why this strategy will work and what advantage it will give to users. So if we say that on the 3rd of January is when you would have invested, or let's say 4th of January, because we should consider the same day of investment, let's say 4th of January, at 17,675 is when we would have invested, and currently the market is at 19,425. So this is about a 1800 point gain versus our 2500 point gain that we had. So which was 2500 points plus this liquidbees was translating into a 15.5% gain. This would be around 11% gain. And the second thing is the drawdown. So here our maximum drawdown went on one of these days. So we basically lost about, from this level we lost about 800 points, 900 points here. So 900 points is what we lost here. That would basically amount to a DD of about 3%, 3.5%. While in this case, if we would have had a straight away investment from 2022, a straight away Nifty investment would have meant a peak drawdown of about 2,000 points, 2,200 points, in fact 2,400 points. So this is like a 10% DD if we would have seen the normal investment versus the strategy that we have. A 10% drawdown versus a 3% drawdown definitely makes much more sense from a long-term investing point of view. Additionally, you are trying to capture the swings with the use of the strategy. So you are gaining from the upside as well while protecting yourself from the downside, and that's how the strategy works. Once again, thanks a lot for watching this video. Happy Diwali. Have a good Diwali, and share this video with your friends and family. I hope they also benefit from this. Like, share and subscribe. Have a good evening. Bye.